What a Monday. It's not often you wake up and there is a major announcement on a Monday, but that's what we got today. Rocket Companies, the Detroit-based fintech platform, has agreed to purchase Redfin. This is a big deal, and the total value in equity is $1.7 billion. And we had talked, Taylor and I, about some other things, but clearly this takes priority. And my friend, highly respected managing editor from HousingWire, James Kleiman, agreed to join us at the very, very last minute. He's out in Las Vegas enjoying the beginning of the ICE experience. Gentlemen, good to see you.
Good to see you, Taylor. Thanks. Good to see you.
I would like some clarity on the definition of the word friend, first and foremost. And then what was the word you used? Highly esteemed? No, that wasn't what you said. You said something
highly
else.
Respected. Highly respected. By
What
me,
is
at least.
Highly.
Highly. He's not just respected. He's highly respected. Taylor, I'll let you know when you fall into that camp. It's the jury's still out, buddy. I love you. I love you. James, what's the buzz like out there? A lot of people talking about this deal?
It's good. Yeah. You know, it's pretty early. So a lot of people are just showing up now, but definitely you can hear it. I was just at breakfast a couple hours ago and people were chatting about it, and there's a lot of excitement here. And, you know, I think it's also interesting because we're here at ICE Experience, and ICE is seen as sort of this, 800-pound gorilla in the mortgage space in and of its own self. So it's definitely a point of contrast. I think it's an interesting one.
What do you think of the terms of the deal, James? What are you hearing? What do you think? Is this going to be seismic?
It's a lot of money to spend on a company that's never made money, right? But it's also, if you want to be a fully vertically integrated company that can control every element of the deal, this gets them much closer to that goal. And it's a big gamble, but if you look around, nobody has the kind of money that Rocket has, and it's probably worth taking if you want to get to that end.
What do you think, Taylor? First impression when you heard the news?
I would like to say for the record that I was up and awake before the news hit. So I was already doing my morning routine when the articles started popping up. I'm not the least bit surprised. I'm surprised it's taken this long. Anybody who doesn't understand what Rocket is doing doesn't understand that Rocket is redefining themselves as a financial services organization, not just as a mortgage company. And they've been working on this for quite some time. So, when you think about an ecosystem, if you think about the lender as being at the center of the ecosystem, what do you want to have wrapped around that? You want to have a real estate business wrapped around that. They've navigated through multiple attempts at entering the real estate market, and so far those attempts have not been terribly successful. A couple of years ago, they shuttered their real estate mortgage loan officer division.
Yep.
But I think that I also think that some changing perspectives on policy and some changes to some of the requirements by HUD and by others have opened up some doorways and created some breathing room. And so this is, in my opinion, probably the smartest acquisition they could have made, to be candid with you. If you look at Rocket, traditionally they are essentially a consumer direct model that has, also worked in the wholesale space and to that end, the correspondent space, but they're essentially a consumer direct business. And they're pairing themselves with a consumer direct realtor business, which makes a lot of sense. It was going to either be Zillow or Redfin, and it's Redfin. And I'm just surprised it took this long.
James, I know you've covered a lot of mergers and acquisitions.
Mm-hmm.
How long do these things normally take? Is this something where the two sides wake up, make a phone call, and negotiate in 2 weeks? Or is this something you think's been going on for months, years? Do you have any sense yet?
I don't know how long this has been in the works. A deal of this magnitude would certainly take at least months. We also know that Redfin had been on the block. We know that there have been others that have been looking around, and it all kind of happens as we're starting to see this sort of large-scale consolidation. And Taylor referenced it earlier, potential changes with NAR rules that could allow for private networks, right? Compass is doing something similar in that vein. And, Rocket has had a couple attempts, as Taylor also said. He's really kind of nailed this one so far, They've got Rocket Homes. They've had sort of a tried to have, agents and LOs sort of playing in the same pool, and it hasn't quite taken. I think Rocket Homes revenue was only 50 million last year. And, we're talking about a business that's doing 101 billion in origination. So, a pretty small percentage of that is going. In fact, Truebill was a much more successful business already for Rocket in that regard. So it's pretty interesting. You're also seeing, Zillow is now getting a little bit bigger in mortgage. Everybody wants to have that, control of the transaction. The question is, if you're getting a Redfin, you're buying eyeballs, right? Because it is still a pretty big portal. You're also getting the consumer direct business. Are you going to be cannibalizing some of the agent business that you're getting, from outside agents that are not using Redfin? But I think at the end of the day, most real estate agents just care that the deal closes. They don't really give much of a shit about all of the other noise.
The agents don't. But as I mentioned in my LinkedIn post this morning, you pointed out one of the things that I alluded to. If you're a broker and you've got a choice of sending loans into UWM or to Rocket Mortgage, do you now go and say to yourself, well, I've got these real estate agents that I've spent years and years nurturing those relationships by teeing them up into the Rocket environment. Am I just setting myself up for solicitation down the road? They're obviously going to have all the information. They've got the CRM, they've got the cadence, the communication. I don't know.
Yeah.
I mean, it seems to me like a Taylor short term. I mean, the whole thing's a gamble, right?
The whole thing is a gamble.
Yeah, but short term, they're gambling with the business that's in front of them right now, right?
Well,
the way I just described it.
So here's the risk you run, right? And by the way, I think there's an over-under, so I think we should do it now. Here's the over-under. How long before Rocket Money has Redfin Homes integrated into the app? And then how long before the tech geniuses at Rocket figure out how to use Rocket Money and all of the app users to search for home buyers and then introduce them to Redfin home buying process? Because ultimately that's the play.
Yep.
The play is, candidly, if I may, and maybe I'm getting over my skis here and predicting stuff, but the play is to integrate everything in through Rocket Money and then to cultivate an entire ecosystem where through Rocket Money, you understand your consumer base. And then you go to your consumer base and you say, hey, you should buy a house because you can afford one. You should refinance your mortgage because you're paying too much. Hey, your credit card rate is way too high on that Capital One card. Let us give you a Rocket Mortgage credit card at 19% instead of 29% with a 0% introductory. So that's the model. That's the direction I think they're going. It makes a tremendous amount of sense. I would not be surprised if Rocket isn't also currently navigating through the purchase of a bank or some sort of financial organization through which they can deploy traditional banking products, because it's a natural fit, as is homeowners insurance, as are a few other things. But to your point, Greg, I think that long term, you also run the risk of alienating your broker base, right? Because particularly the third party brokers who have navigated and cultivated traditional kind of retail-esque realtor relationships, they're going to start thinking twice about whether they want their loans landing in a system that may get then transferred over to Redfin, which may land in a Redfin agent's CRM portal and start getting cultivated. So there's a lot of potential for what I want to kind of gently refer to as cross-contamination. And this is when you're in the big leagues, these are the risks you have to take in order to make big swings at bat.
So we did have an exclusive interview with Varun Krishna, who's the CEO of Rocket, earlier today, just after the deal was announced. And regarding the broker question,
why is he on this call with us right now, James? Come on, what?
It's unfortunate. Yeah, I don't think he was able to make it, but he said basically that this is going to give the brokers an even bigger opportunity, right? That they're not going to be, they're not going to get the short straw out of this one, and it's just going to expand the potential opportabilities in their networks.
Well, you'd expect him to say that, right? What else is he going to say?
Yeah.
Right. But
yeah.
let's
going to cannibalize your business, but
let's play a little chess here, and let's start to dream about the mousetrap that they could set up and particularly with the potential of RESPA reform and being the path maybe being cleared through the MBA's white paper for giving gifts of appreciation just because you feel like it in any amount you want.
Yeah.
You know, you could see them setting something up where it's not even about loyalty from the agent to the LO anymore, and it could just be about a better deal.
Yeah.
Right? It could just be about them going in that direction.
And Greg, you missed something. Don't forget that Redfin left the National Association of Realtors. So Redfin is no longer obligated to operate under the constructive rules that NAR members are obligated to in the 50 states that they're in, because they exited NAR when the NAR controversies were taking place. Just going to use that word, controversies. And during the period that just before Stitzer was kind of formalized into a settlement. So you have the added complexity that Redfin doesn't play by the same rules that Remax does and Keller does and Century 21 does.
What does that mean? James, can you peel that back a couple of layers for us, or do you want Taylor to do it since he made the point?
So yeah, they did leave the NAR. I don't know that has as much bearing on the market dynamics. There are a couple others. Anywhere is a very significant real estate brokerage, and they've also chafed against some of those rules, and I think they might have left as well. And a lot of these brokerages have the ability to leave the NAR if they like. And you know, as long as you have access to the MLSs, I'm not sure that has as much.
But it means they're not obligated to meet the contractual requirements of the language, the cooperative compensation language that NAR requires now as a part of the settlement. That's what it means.
That's true. Yep.
So they can do
a different kind of commission sharing than members of NAR are capable of doing under the NAR's guidelines.
What could that look like, Taylor? Give us an example.
I mean, we're getting into the wild, wild west here, right? So we had HUD suspend the rules that prohibited LOs from being realtors and get paid on FHA loans circa 2022. I forget the ML, the mortgagee letter, but we all kind of know how that happened, right? We have some organizations pressing for the repeal of certain sections of RESPA 8, which would open this up even more. And now we have a model where the commission structure isn't subject necessarily to the provisions of the settlement agreement with Stitzer. So there's a whole lot of interesting things that are all wrapped around how realtors get paid, what realtors can do, what loan officers can do, what loan officers that are realtors and realtors that are loan officers can do. And then you have the added complexity of the fact that the CFPB just withdrew their action against Rock. So think about the timing here. The CFPB just withdrew the action against Rocket for some of the violations of RESPA, right? And it looks like DOJ is standing down. I think, James, you would know better than me.
Yeah, they dropped a lot of cases, Taylor. It wasn't, I don't know that they had like a very specific, you know, like, oh, this is just about Rocket. They dropped the Vanderbilt case. They dropped 1-2, right? Yeah, so.
Right. And then all of a sudden this merger is announced. The timing is really interesting.
Kind of fantastic, isn't it?
Perfect storm, or maybe the opposite of perfect storm.
Well, and you forgot to mention the Super Bowl ad, because obviously they knew when they wrote that check that this was coming right behind it. Yeah, I mean, that was just a few weeks ago.
So. Get done overnight. We all know the deals like this get done over a period of time, and then the paperwork gets done over the weekend. But this is, my guess is this has been going on for a little while, at least in talks.
So how does this solve the big problem that Rocket's had? And that is, the big problem Rocket's had is that they've tried to do this without getting integrated into communities. So that's the thing. They're going to have to solve that riddle in order to get anywhere they want to go. They've got to have boots on the ground with originators that understand the schools, the Starbucks, where is it, all that other stuff, right? That's my belief. I mean, do you guys feel differently? And how do they solve that? Is the next move going to be they start acquiring IMBs? I could see that. James, what do you think?
I think that's unlikely. You know, it's a challenge because, as you mentioned, Craig, most deals start with, let's say I want to buy a house. And well, Greg, you bought a house in an area that I want to live in. And so I say, Greg, buddy, like, you know, did you like your agent? Should I work with them? And you recommend Taylor. as my agent. And so I work with Taylor, and Taylor recommends Dana because, Dana's a great LO. And that's still how, 2/3 of the business works, right? I think that 1/3 has a lot of disruptive potential. Generationally, habits change. And if people are coming in through the funnel through Rocket Money, or they see it on Redfin, they see a house and they don't have an agent already, yeah, that's a way to get it. But they have to solve that last mile problem, which is, if Greg, you don't know shit about the schools, I'm going to drop you because I never had much allegiance to you in the first place.
But
and that's what I care about,
I'm thinking about as you talk right now, Taylor, I
Yeah.
want you to touch on this. Maybe that's part of the strategy. I mean, come on, they're not stupid. They're sitting in a room talking about this. They know what their Achilles heel is. Maybe they're going to flip the equation and the agents are going to be representing both now they're part of a lender. We have, we're on the ground. We understand everything. And oh, by the way, part of our company is this integrated, streamlined, cheaper, quicker, more efficient process. Here's my LO. Maybe it reduces the importance.
So I actually think there's two kinds of buyers. And call me crazy, but I really do think there's two kinds of buyers. And I think that our system has cultivated for years and years and years an idea that everybody's the same and we should treat everybody the same. There are some buyers that need to spend a lot of time sitting with the agent, driving around, looking at houses, having their hand held, explaining to them 50 different options, thinking about it. And those are more of like our traditional buyers, right? And those buyers often are buyers that also need, I believe, my humble opinion, that need to have a hands-on loan officer that can sit down and go through financials and talk about options and do all those kinds of things. And then there's other buyers like James. James wants to go on his phone, look at the house, find the one he wants, click a button, put that house inside of a cart, and then say, yes, click, I buy this house, approved. Right? Almost like having your house door dashed to you or Amazoned to you. There are buyers like that. Those buyers couldn't really exist 10 years ago. They could start to exist, during COVID and post-COVID was when we really first started seeing people buying houses online sight unseen, but our systems really didn't support it yet. And what Rocket, I think, is doing is they are trying to be the first entity to get to the point that they can do a click to buy, think of Amazon with the one click. They're getting to the point that they're going to go after that segment of buyers, the ones that want to be able to buy a house on their phone through the Redfin app, inside the Money app, click the button, get automatically approved, ready to go, ready to close. Now, does a first-time home buyer who doesn't balance their checkbook and struggling to figure out where they want their kids to go to school, does that buyer work in an app-only environment? Probably not. Right. But does James, who knows real estate inside and out, knows what he qualifies for, knows what he wants, knows where he wants to live, knows how many bedrooms and bathrooms and what neighborhood he needs to be in, and wants to move fast? Can James do that model? Yeah, 100%. I think that's where they're going. And it makes a lot of sense, by the way. It truly does make a lot of sense because I've talked to friends who want to be able to click a button, buy a house, and close their mortgage all online on their phone. And the technology all exists. We just need to kind of weave it all together. But I've also talked to realtors and friends who need to sit down for 3 hours over a cup of coffee and figure out a plan. And that also is important.
James, what do we think this means for the traditional business? IMBs, broker shops. What do you see the impact being longer term if this works?
If it works, there's a new paradigm, right? If it works, they have a massive advantage over pretty much everybody, unless the other brokers, the other retail LOs have really tight relationships with producing agents who are able to get to those buyers first, right? So it's going to be an uphill battle. I think if it is successful, and if it is successful, we don't even know the magnitude of what that means, right? I mean, that it's such a fragmented business. I think UWM is the leader at 7.5% market share, right? So if you even have one company at 15%, I mean, that seems like a huge shift in how the business is even interpreted.
Taylor?
I think that this business model is robust. I think people are going to come in and out and do lots of different things. I think that historically, I think it's a healthy business model when we have a healthy broker wholesale model, a healthy retail model, and a healthy kind of consumer direct model. I think it's important that customers have a lot of choice. James makes a really good point about the UWM market share. And I think that we all often forget that there is, like, I remember when Wells Fargo was north of 10%. Once upon a time in our business, Wells owned the mortgage business. 2 years before that, guess who owned the mortgage business? Washington Mutual. I remember when WAMU owned retail, owned the overall mortgage business entirely. Right this second, nobody owns it. And that's actually a really healthy thing. I think it's healthy for our industry to have a lot of competition. I think that it's healthy for there to be lots of brokers selling to lots of wholesale outlets. And I think it's healthy for lots of IMBs of various different sizes to exist, because as long as we have a lot of players and a lot of competition, that drives down cost for borrowers and it creates lots of options. I think that's what we have to support.
So I've heard oftentimes that people that are not supporters of Rocket say, well, their pricing isn't good. You know, they've got too much baked in. But you know, they pick up an asset like Redfin, who's a discount real estate firm, right? 1% or whatever the fees are that they charge.
Yeah.
And as I look down the road, I can see them rejiggering things so that they build an assembly line, right? They lean more on the real estate agents to represent the community. And then they've got these LOs that are on salary, making 30 basis points. And now they're able to drive the price down through what John Heck alludes to here in the comment section, bundled pricing, right? Because they have a title company and they've got Rocket money. Sure, they have insurance, auto, and all that other stuff. You know, this consolidation to me means that the price is going down. And if they push the price down because they've got so many different verticals to realize money from, that's going to be very problematic for the rest of the industry. I'm answering my own question. Since I asked you to, I'm answering my own question. I hope that's okay.
It reminds me a little bit of the home builders, right? Where they have huge capture rates and they keep everything in-house, right? You know, they have their own sales staff, they have their own LOs, they have usually title, they have pretty much everything there, and they can offer, you know, huge discounts. They can work with agents when they need to sell inventory, and they can ignore them in times that they don't. You know, obviously that's a different kettle of fish when you come to kind of purchasing existing home sales, different dynamics, but you can kind of see the inkling of maybe a very different kind of business model really take form. And I think it's interesting because if you look back at the 2017 IPO that Redfin did, and by the way, they valued that IPO at the time at 1.73 billion. So basically the same as they're being acquired for now. On the day of their IPO, Glenn Kleimann, the CEO, characterized Redfin as the Amazon of real estate because he wanted to be a one-stop shop for everything real estate, you know, and they had this big marketplace. They had agents. They bought a mortgage company. They bought Bay Equities, you know, a couple of years later. Yeah, a couple of them actually. Yeah, exactly. And it never quite worked out. You know, I don't know if that's because Redfin, for whatever reason, couldn't figure out the economics. And now that they can, because Rocket has such a powerful engine on the financing side and lead gen as well with Rocket Money and everything else. But, you know, it's not like they're the only one who's tried this. There have been a couple shots and no one's quite figured it out. But if they do, yeah, it's a totally new game.
Well, it is. But these things also cycle. Let's just remember that, you know, right now it's a new iteration of it using technology and handheld apps and marketplaces. But this is not a new story. I mean, yeah. We can go back way back in time and look at all the real estate companies that had mortgage companies and all the builders that had mortgage companies. And we can look at Costco, right? Costco was the great distributor that disrupted mortgage when they decided to have their own mortgage program. And there's no more Costco mortgage. I don't know if you guys know.
They exited a couple of years ago.
Right.
Yeah.
So Costco tried it multiple times. Costco had multiple iterations of Costco mortgage. They tried it with one company, then they tried it with a bunch of companies, and they went back to another one company. Our business, and this is the one thing everybody fails to understand. Our business is incredibly complex. Whereas you manufacture a car with a consistent set of supplies and inputs and end up with various versions of cars, we manufacture a mortgage from scratch every single time because every single borrower is different. And so it's like working with a brand new set of supplies that you've never worked with over and over and over again, every single time, thousands and thousands of times. And you still have to then somehow get them all to look almost exactly the same. right? So it's either a conventional 30-year fixed or a Govy 30-year fixed or a PLS 30-year fixed at the end of the day. So we try to homogenize. I love that word, by the way. We try to homogenize this diverse set of borrowers.
If you love it so much, you should learn how to say it the right way.
Homogenize.
Homogenize.
Oh, you're right. I should say it right. I thought you were going to say it a different way. Homogenize.
Well, you really do. You love it so much, you changed it.
You just embarrassed me on national television.
I love you, buddy.
I know you do. You just like to, Greg, Sher. It's just, you should say things the right way, Mr. Sher. And also,
you just said sure. It's Sher, but so you got me back.
Oh,
hey, look, I promised James I'd let him go at the bottom of the hour because he is at the ICE experience, and he's got meetings back to back to back today. This wasn't planned. He joined me on very short notice. But I want to get your comments, James. I want your closing comments, and then I want you to react to this text I got from Brian Hale, who's been in the mortgage game 43 years. He was at Countrywide and other lenders that were acquired, so he knows all about the acquisition game as well as anybody. This is his words. My 2 cents is that it's a good deal for Rocket, but not the end of the world for the industry. So kind of along the lines of Taylor, Redfin stock had been on a downhill slide most of last year, primarily because their business model has not worked.
Yeah.
Grossed $1 billion and lost $165 million for the year, only a 27% capture rate for Bay Equity sales. He agrees with my general premise that models in the industry are and will be changing. Redfin traded for all stock, no cash for Rocket stock that had been trading up recently, but is selling off today. I would characterize it as a significant event, not a nuclear bomb, and time will tell if this works.
Yeah.
James?
I agree with that sentiment.
James, give me a comment on that and then a final thought, and then Taylor and I will take it home.
Yeah, I think that's a pretty solid statement. It reminds me a little bit that this is maybe a torture analogy, but in sports, you get a player who's phenomenally talented and does well, but it's not the right situation, not the right coach, not the right program. Maybe a change of scenery works, and the strength of the other players or the system allows them to flourish, and that could be a really intriguing and powerful model in the future. But it didn't work where it was previous, and so that risk still remains. And Redfin has not made money. Redfin is. It was only a couple months ago that Glenn Kleimann was telling everyone if rates didn't drop, that everyone would be drinking piss and blood, right? So it's not like this was a mega successful industry, a mega successful business in an industry that everyone had figured out. So yeah, I still think there's some risk there, but there's a huge amount of potential. And whether others will have enough capital to, create as compelling a model, and if they're able to execute, that still remains to be seen. So it's an exciting time, but I don't think it's game over.
Yeah, you helped to break the NRL to Union Home Mortgage deal. You and HousingWire. Do you expect more consolidation? Are you hearing? I know your ear's always to the ground. Do you think there could be more of that coming?
Yeah, I've got a couple scoops coming this week. There's the biggest mortgage brokerage out of Massachusetts. They're going to be. They've been acquired by another company, so I should have that story either today or tomorrow. We got a couple others, and even on the real estate brokerage side, we've heard a lot of rumors about Compass being acquisitive of another very, very, very large real estate brokerage. So it does feel like there's a lot going on right now. Absolutely.
Yeah, that's the question: is what are other realty firms thinking? Because obviously this is a call to the mat and a challenge for them to do something too. So you wonder what the response is going to be. Then maybe there'll be consolidation on the real estate side. Yeah.
I think so.
Yeah. All right, buddy. Well, enjoy Vegas. Stay away from the tables.
I don't gamble, so no.
Hey, always hit on 16 when the dealer has a face card. Don't be that guy that has that feeling.
I don't know what that means, so
yeah,
that should
don't
be
have
no
a feeling. Most people listening understand what I'm saying. It's
Okay.
not optional. If the dealer has a face card and you have a 6, you always hit. Okay? James, thanks so much. Really appreciate it. Taylor?
Yeah,
Just
I've
the
suspended
two
all
of us.
jokes. I had a bunch of jokes with the hit on 16 thing, and I decided not to go with them.
You know what? I'm glad that you didn't.
Yeah.
Well, that was great. Appreciate his time, of course. It's very interesting.
Great.
Yeah, he's amazing. A lot of eyeballs are going to be heading Rocket's way. I mean, as I look at this press release, Rocket companies will benefit from Redfin's 50 million monthly visitors.
Mm-hmm.
That's a mammoth number.
Yeah. Huge.
So I mean, how much of that do they have to capture to own 15% of the mortgage market? Not much. I mean, I can't do the math that quick, but you would imagine they'll start to weave into some of those cookies and those things that follow people around, little nuggets about mortgages, huh?
Well, yes and no. So I don't want to sound like the naysayer, but I may sound like the naysayer a little bit. Buyers go online, they go to Redfin, they go to realtor.com, and they go to Zillow, right? We shop around, and then we take our phone, we stick it in our pocket, we drive over to our friend's house who's a realtor, and we say, hey, friend, what should we do? And the friend says, okay, here's what you're going to do. You're going to buy this house. It looks really great. It's awesome that you found it on Zillow. That's terrific. Now I'm going to write the offer for you. And my mortgage person is this guy, Greg Sher, who's an expert. And you need to actually work with somebody that I know, that I trust, that we can coordinate together, because that's how I make sure that your deal gets done.
Yeah, well, I talked to Greg Sher, and his rate is 1.5 points higher than Rocket's, and they're also giving me a discount on my title, my insurance. Greg Sher said he couldn't do that.
Okay, so we need to talk to Greg Sher and figure out how to get a little bit closer.
Yeah.
But if you want me to help you make sure you actually get in this house, I kind of need you to work with people that I know. Otherwise, I'm just spinning my wheels, wasting time trying to get you to buy stuff that you can't buy. And I need to know you can actually buy this stuff. And I don't know all these other people, but I know Greg Sher.
Role playing with you is kind of fun. We've never done this before.
This is getting a little
Yeah,
more.
I'm enjoying this.
Yeah. So I need to talk to Greg. And if Greg says you're okay, then I'm going to take you and show you houses. But Greg has to say that you're okay first. So I need you to do this thing called a pre-approval with Greg.
Yeah. Right. Or you could say,
after that, you want to go shop around, fine, we'll think about it.
Yeah, you could say, well, you're looking for a house in Bowie, Maryland. The loan officer you're dealing with is where? Oh, he's in Detroit, Michigan.
You think they've ever been to Bowie?
No, definitely not. So what do you think, man? You think this is going to work? It's
Sure.
it's a big roll of the dice, man. I mean, the other side of this is we're talking about how great this could be for Rocket and how they could, eat market share. I mean, look at Rocket's history. They're not where they thought they'd be. I mean, but back 10 years ago when they hit, press button, get mortgage, everyone in mortgage thought this thing was going away. I can remember when I saw that, I was like, oh shit, I'm going to be out of business in 6 months. Here we are 10 years later. So look, there is no guarantee that they're going to be able to make this work. This is like, they're swallowing something huge here. And that's the other side of it. Like, what if it doesn't work? Right? I mean,
if
you what are shareholders? I mean, they gave away, it's worth 1.7 billion in stock. I mean, the other thing is the timing is incredible for them because they're coming up on a refi boom. I mean, don't think they didn't put that in the calculus to say, shit, even if we don't knock the cover off the ball, our numbers are going to look glorious for the next 36 months while we figure out what the hell we just took on,
Yeah. And the whole refi boom thing, look, I've said it before. I'm going to say it again. I don't believe there's a refi boom coming. And I've talked about this many times, and there's a bunch of reasons why. The number of loans that you can refinance when we get into that, let's call it 5 to 6 range. Sure, it feels exciting, but a lot of those people are at high DTIs to begin with. Their insurance rates have gone up. Their property taxes have gone up. That DTI may not qualify today on today's insurance rates and today's property taxes that did qualify back when they financed before. So you got a segment of borrowers that are not going to be in the money like we think they're in the money just because rates went down, because they got to requalify. I mean, barring doing some streamlines, right? That's number one. Number two, if you think that the refi boom is the big servicers are going to get there 3 months ahead of everybody else. Just remember that the big servicers can start refinancing 3 months plus earlier than everybody else because they're in the money 3 months earlier because they can do those refinances at 102, 102.5 instead of traditional, the traditional broker model, retail distributed model is you need to be more like 103 to 103.5. So you got to be 100 basis points ish higher in rate. Which is, there's, if you look at rate on a timeline, like a chronology, it's a few months, you get to 102 a few months earlier than you get to 103 for the same note rate to do the same refi.
Mhm.
So there's going to be refinances, but it's not. I don't think it's going to be some big 2021 refi boom.
No, I mean, that'll never happen again. But there is enough there. There are enough homeowners at 7% and higher to have fun for a year to 18 months.
For
or
who?
6.
Who's going to have
For-
the fun?
Probably the servicers and any mortgage company that comes up with with a low price, lower comp, a division of refi,
Yeah,
whatever.
low
Hey,
cost refi.
Have you seen all these incredible people that are listening to us today? All of our favorite people are on here.
I can't see anything. Am I supposed
Well, I'm
to
going
see
to tell you. Just hear these names: Bill Stevens, Randall Gillespie,
Randall Gillespie's on? Wow.
Yep.
I'm
Melissa Langdale. I mean, Mortgage
I don't-
Royalty.
I don't
Jeff
feel-
Lake. I mean, speaking of Mortgage Realty, Candace McNaught. I mean, she's amazing.
I'm a huge fan of hers.
Dawn Hooper. I mean, come on. That's the holy grail right there, those three.
Yeah, I agree.
Also, Tony Valencia, Atran Fiola, Dave Savage, Kate Gurvich, Chris Willoughby. She's amazing. Yeah, appreciate everybody listening. Any closing comments, buddy? Never a dull moment in mortgage. How are you
So
feeling?
this
you
is not
feeling
even
about
our
that?
agenda for today. We were supposed to talk about a whole bunch of other
I
stuff.
know. Well, how are you feeling? How are you feeling about the business environment we're in, given all the craziness? I mean, the Dow is getting absolutely slaughtered. The bond is going down. We've got the tariffs, the economic concerns. A lot of chatter online on LinkedIn about what this administration is doing to the economy. It certainly looks like it's slowing it down, which will benefit people in mortgage most likely, but not going to benefit others. Where do you land on that?
This too shall pass.
What does that
Whatever's
mean
happening
exactly?
today, it's going to change
Well,
tomorrow.
we know that. Come on, is that a no comment? Is that what that was?
No, I think that we all get so wrapped up in what happened in the last 15 minutes that we forget that real estate is a very, 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 very long-term play. Everybody needs a place to live. Like everybody. Like I don't know a single person that doesn't need a place to live. I need a house. I need a roof. You need a house. You need a roof. You want your kids to have a home to live in, right? Housing is fundamental. Housing is more important than politics. It transcends political lines. It doesn't matter whether you're red or blue or purple or some other, color. Everybody needs a place to live. And so we're always going to have housing. We're a little short on housing.
I want to rejigger the question. How do you feel about the reasons the bond is coming down? Because that's where the rub has been among certain people. The fact that
I love the way that everybody is an expert and decides that the bond is coming down because of X. Or maybe X is the wrong, because of Y. Yeah, I'm gonna go with Y.
Well, it could be X, as in as in Elon Musk.
Could be
X. Yeah,
could be. So if you look at, I read something recently that said that 63,000 government jobs have been eliminated. Right? I don't know if that's the right number or not, but that's what I read. That's a big, huge number. But how much did it really affect unemployment in general? It's a blip. It's a tiny little blip. It's pretty big in Washington, D.C., specifically in that marketplace. But overall, it's not that big of an impact for jobs when you think about your typical monthly jobs report is whether or not we had 100 to 150,000 new payroll added, right? That's like the typical number. So it's like a blip in a monthly report.
I'm going to give this one. I'm going to give this one more stab. Okay. I love when we do this. By the way,
I'm really good at this. Like this is,
and I am too. I mean, this is like two heavyweights
and not get wet.
It's two heavyweights in the ring here. I'm gonna give this one more shot.
Bring it.
There's a population of mortgage folks.
Yeah.
That feel like the reason they don't care that rates are coming down. They're upset by what they perceive as the reason it's coming down, and that's because of mass chaos in Washington, threat of tariffs, geopolitical concerns, all the layoffs. And several of those people have said, I'd prefer not to have this. I'd prefer, if this is what it takes to lower rates, I'd rather just do it the organic way. First of all, yes or no? You like how I threw that in there? Do you agree that the reason the bond is where it is today is because of what the administration has done in the first 30 days? That's a yes or no.
No.
Okay. All right. There you go. And that kind of like lets you completely off the hook. That was brilliant. You are better than I am. Damn it. You got me. How are things going at CHLA, Community Home Lenders of America?
Oh God, I got to tell you, it's really well. Here's what's interesting. Things that we called for a year and 2 and 3 years ago are now finally being realized. And so we're really super excited about it. So for instance, 2 and 3 years ago, a little over a year ago, we called on FHA not to install environmental friendly requirements that was going to increase the cost of new construction by 20 to 30%. I sat in the room with the leaders of FHA explaining that if we have to rejigger the kinds of windows we put in houses in order to save a little tiny bit on electricity, we're going to totally throw off the construction business and jack the prices of new homes up. And that's going to impact the overall environment and the overall valuation of real estate, which hurts everybody. Mm-hmm. And it wasn't super successful. And just recently, HUD has issued a moratorium on the new, I think it's ESG rule, to require a lot of Energy Star environmentally friendly components to be added into all new construction in order for a house to be eligible for an FHA loan. By the way, when we talked about that, we also talked about the fact that by making it an eligibility issue, now you're putting IMBs, right? Because IMBs produce 90% of FHA of Govy loans. You're making IMBs the gatekeepers and the policemen of whether or not a house has the right windows in it. And that is just not our job. We do financing, not like property inspection. So we were thrilled when we saw the announcement from HUD that they're suspending, at least for 6 months, that requirement. And there have been a number of others. We're really, really optimistic about some of the positive, proactive changes being done within not just HUD and FHA, but specifically within Ginnie Mae. We think there's a pathway to enhance and improve Ginnie and create new levels of efficiency that they've desperately wanted for years. If you look at the way Ginnie has operated for a very long time, they've been using technology that's 20 and 30 years old that just doesn't work. And there's a tremendous opportunity to improve the efficiency of that organization. So we're pretty excited about that. There's a lot of really good things happening, specifically the CFPB. And I hope a few of my friends are listening. We are very excited about what's happening at the CFPB, about the potential to restructure and rewrite what this organization, what this agency does, based on what the original intent was, not what has organically changed over the last 10 years that completely left and deviated from the original intent that was proposed and thought through under the Dodd-Frank legislation.
LO Comp?
Yeah. So LO Comp, the way it exists today, is not what was envisioned when Dodd-Frank was written. The way that LO Comp has been enforced, regulation by enforcement, and the rules that have been put in place, and the policies and all the different things that have gone on are way beyond the scope of what the original rule was intended to do. It has been a complete, I'm not going to use that word. It has been a...
How about I say the first word, you say the second one. You ready?
Mine was going to end in atization. You go ahead.
Shit.
Show.
What a team we are. It's amazing. I'm telling you right now, that seals the deal, man. But so far, CHLA is pleased with the communication and the channels. They appear to be open with this administration.
Yeah, they do appear to be open. We're able to communicate with them. I think that the administration and their emissaries and leaders have been a little on the busy side, right? Navigating through a lot of change internally. So it makes sense that it's been difficult to get outbound communication, but we have been able to communicate with leaders in various different roles and give our opinions and thoughts and suggestions. And some of those seem to be received well.
Cool. Well, I appreciate you, buddy. I think we've covered a lot of ground here, huh?
Yeah, a lot of ground in a short period of time.
Yeah, it's great to see you. We should invite our mutually good friend Donna Chachevsky onto the stage here. She's always back there just grinding away. It is a very special month for very special women, right, Donna?
Hi.
Hi. How are you?
Good. How are you?
Good. Are you surprised?
Yes, this is unexpected.
You're back there, you know, pushing all the right buttons. You're clearly the looks
Trying
and the
to.
brains. The looks and the brains. Although you couldn't make me not look like Casper the Ghost. What's whiter, me or that vase? Which one is whiter? Oh, let me see. Hang on.
I think it's you, just because the lighting back there. Okay, now it's
What's
now.
whiter?
Well, still you, I
close.
think.
You
Pretty
know what?
close.
It's pretty damn close.
It was pretty close. I'm red faced because I got my red wall and it never quite works.
Which you still
I need a
haven't
red wall.
painted.
I need a red wall.
Or some
Yeah.
makeup.
I
Could
can't
always
go-
go that route.
I could go that route. I'm not going to do it though.
Can we do like those Instagram filters and have like the little smiley faces and
I just need better lighting. You know, that's what I need really.
Well, we had it right, and then you kept changing it. So if you
Yeah,
watch,
well, you know.
if your viewers watch like older episodes of this, they'll see that the lighting's great, and then Greg started fidgeting with it.
How about that? You know what? This is better. You should have told me to do this the whole time.
Well, I did, and
I
then
would-
you changed it again.
I was told by a friend the only constant in life is change. So think about that for
well.
a minute.
Yeah, but don't change lighting.
Everything but lighting. Yeah.
Yeah.
All right. Well, this has been fun. I appreciate you, Donna Taylor.
Thank you.
thank you.
It's been
Appreciate you too.
yeah, hell of an edition of One-on-One.
I'm starting to feel a little Howard Sternish. Like you're Howard, she's Robin, and I don't know who
You're Baba Booey.
Am I Baba Booey? Okay.
Yeah. Baba Booey. Yeah.
Baba Booey.
This has been a great episode. There were so many comments, and I know Taylor, you can't see them, but if you go on LinkedIn after, you'll see. This has probably been the most active episode in regards to comments. Yeah.
Go
Go in there, buddy.
I've
You're
enjoyed
on.
watching them actually.
Get in there. Start to answer these questions. You have a higher IQ than I do, so you're responsible for answering all the questions. All right.
But you have a higher EQ, so you know.
Yeah.
You're taller and better looking, so you
Here,
answer the
I'll-
questions.
I like this one, by the way.
Randall's the best.
I love Randall.
Hashtag
the
boss.
He's got great energy. All right. Well, this is it. We can say goodbye. Let's not be afraid to say goodbye. It's
right.
not goodbye.
Aw,
It's just goodbye
sad.
for now.
So long farewell. I'll be saying goodbye.
Yeah.
All right,
All right,
We'll see you
y'all.
out.
We'll do this again next Monday on One-on-One. Thanks for joining.
Thank
So
you.
long.
Bye, everyone.
Bye.